In today's video, I want to look at the dollar and how it might relate to gold. Um, Several days ago, I did warn traders that the ECB, the Bank of Japan, People's Bank of China, basically foreign central banks would try to stop the dollar decline. I think other central banks are going to try and weaken their currency as a means of offsetting any trade deals made with the U.S. And so there was risk that the dollar decline might end a bit prematurely. Certainly, there was a good chance that we would get a bounce off the 200-day moving average, which we have here. But this may end up turning out to be a premature daily cycle low if we are getting a intervention in the currency markets. Obviously, you're never going to get a normal daily cycle that would bottom on day 14. These cycles normally run anywhere from 35 to 50 days, so you're not going to get a natural bottom on day 14, but you could get an intervention in the currency markets that could force a bottom much earlier than anticipated. And I warned that this was a possibility about a week ago when we were nearing this 200-day moving average. And we certainly have a bounce off the bottom here, and there is risk that we may be experiencing an intervention. And if the ECB, Bank of Japan, if they can weaken their currencies against the dollar enough to push the dollar back above this peak, then we have to be prepared for this possibly turning out to be a very early and premature intermediate cycle low. And that could mean that gold especially, and possibly everything else, the commodities, oil, stocks, might enter some kind of corrective phase. So let me switch over to the gold chart. All right, so let me widen this out just a bit. All right, so while, as I said in my last video, I think we are possibly starting a new C wave advance. Even C waves have corrective moves. Nothing goes straight up. And about every 5 to 6, 7 months, you'll get a larger degree correction, an intermediate cycle correction. And we haven't had one of those since this bottom back here in August. So in theory, we're due unless the dollar continues and gives us, a true intermediate cycle low. In that case, then I would say where gold is going to come up and at least test this resistance zone here between 1360 and 1370. But if other foreign central banks intervene in the currency markets and they stop the dollar from completing its intermediate cycle low, and instead we get a premature bottom and we start another intermediate advance, then that could be an excuse for gold to move down into an intermediate degree correction. And that's what this was. This was an intermediate correction. This right here is an intermediate correction. Obviously, this is an intermediate correction. This here is an intermediate correction. So we haven't had one of those larger degree corrections in quite some time. Now let me switch over to the weekly chart. All right, so one of the characteristics of an intermediate degree correction is that price will usually, almost always, it'll drop below this 10-week moving average, and more often than not, it'll drop below it far enough and stay below it long enough to turn this moving average back down. So you can see, obviously the average price moved below and turned the average down here. It did so as well here, again here. So all of these were intermediate corrections. You can see we have had nothing yet anyway that would qualify as an intermediate correction. Price has not dropped below the 10-week moving average, nor has it turned the average back down. And at some point, we've got to have one of these. and we're potentially at a spot where that could happen if the dollar correction has been short-circuited, and we're now about to start a multi-week rally in the dollar. Then that could trigger a corrective move down, something that would come back down and drop below this 10-week moving average and then roll this moving average back over. So let me show you a potential target. All right, I've changed this to the 200-week moving average. All right, now I'll widen this chart out a little bit, and you can see here as we, here's the baby bull, regained the 200-week moving average, and then we've kind of been in this whipsaw market um, on either side of this moving average here for a while now. So if gold were to start an intermediate decline, it is conceivable that it could come back down and test this moving average at around 1240-ish or so. I do think if we are starting a C wave advance, then it's probably time for gold to hold above the 200, but that doesn't mean that it can't come back down and test it during an intermediate decline. So my suggestion right now, since we don't know whether or not the corrective move in the dollar has been aborted, and on the chance that it may have been, my suggestion is to really tighten up your stops on all metal positions. If you've got some gains on your positions, I would tighten up your stops enough to where you don't give back, at least all of those gains. I would give it a little bit of room to work. You don't make it so tight that you're going to stop out on the slightest little wiggle down, but I would tighten it up enough to where you don't lose all of your gains if you have some gains from this move up. So over the next day or two, we'll keep an eye on the dollar and see if it is pushed back above its 50-day moving average. Then I think you've got to be at that point very careful that central banks may have stopped the corrective move in the dollar, stopped the intermediate cycle low, and gold and maybe the commodity sector in general, and possibly stocks, which are also starting to get late in the daily cycle, could all take some kind of hit as the dollar rallies. At least into for stocks, they're due for a minor daily cycle low. Probably maybe the same thing for oil. Maybe it forms a right shoulder of a head and shoulders, inverse head and shoulders pattern. And gold, there could be the potential for an intermediate decline. So I would strongly suggest tightening your stops up. If you've got profits, tighten them up enough to where you don't lose all of your profits, at least book some gains. And we'll see what happens with the dollar over the next several days.